back with TheoTrade. This is Don Kaufman. March 24th, 2021. 10 minutes to go to the cash close with the markets, well, literally all over the place. But you got to take a look at the Nasdaq. You got to take a look at the Russell, and you got to ask yourself, is that going to be a sign of things to come inside of the broader marketplace? You know, a moment ago, I just said the markets are all over the place. You're like, no, they're generally speaking down. Well, the S&Ps are here at 3890, and we've seen this before where they actually come under 3,900, and it kind of takes an express train down to like the 3880 handle, something we actually talked about quite consistently in some of the recent weeks of trade. Nevertheless, so the S&Ps are largely unchanged. You get the Nasdaq down 1.3%. The Dow is effectively up on the day. The Russell's getting whacked by the tune of 2%. And if that's not enough, take a look at the advanced decline line inside of the S&P 100. Yeah, it's a positive advanced decline line. So let's start to break down some of the trade, because this is a little bit of the opposite, if you will, of what we would have expected. The only thing that we should expect at this point is, again, the S&P is taking the express train down to the 3880 handle right around the close. You can see some of that sell side activity starting to kick in with just minutes to go to the cash close. So let's get to work on this this evening's video. One of the first things that you really want to take a look at tonight that is striking, to say the least, it is the advanced decline line. Now listen, the advanced decline line, I put quite a bit of weight into this, but you know, in a trading session like this, you know, this kind of leaves me a little bit nervous. It leaves me nervous because the advanced decline line is literally positive at this point, but the S&Ps are actually down 10. You have to realize what this means, because what you want to look for in a marketplace, and I've just been talking about this incessantly, is complete total correlation. What correlation kind of comes down to is if you look at the S&P 100, and again, if you see 90 stocks, for instance, trading to the downside, if you have 90 stocks trading to the downside, 10 up, that would be considered correlation, right? For the most part, to the downside. Not only aren't we anywhere near that, okay, I mean, basically we're a 50-50 advanced decline line, but we're still having kind of a rough day, given the fact that the Nasdaq is down over 1.3%, the Russell. So for the most part, the marketplace is actually split. It's completely bifurcated, and we have now pockets, like literally different marketplaces and pockets. And the reason that I caution you on this front, this makes an incredibly difficult read, not just on an intraday basis, but, you know, listen, you can do all the technicals you want inside of the S&Ps. You can take a look at the spiders pretty much till you're blue in the face. The problem you have over here, if the Nasdaq continues to go, and that is sell off, but you think it's not going to actually break the back of the S&Ps, you'd be sorely mistaken. Okay, the markets themselves are facing considerable risk at this point in time. The same thing goes for the Russell here. Russell's down over 2%. Again, you kind of feel like the Russell, it's in its own pocket. It's autonomous. It's just kind of off trading on its own. Well, it is, of course, until we hit a higher correlation coefficient. And you're going to know, I mean, this marketplace has been kind of cornered lately. You look at the S&Ps, and we're trapped inside of a relatively tight volatility box. And that volatility box, and I'm actually going to draw it up on the screen right now, that volatility box, I'll go ahead and kind of define it right back here. Okay, we're just pinging back and forth at this point. When I say pinging back and forth, we started jumping in the volatility box, brief and fleeting moment, brief and fleeting moment. For the most part, we're just channeling back and forth, and we've been doing this literally since, for the most part, kind of early February. So here we are, like 2 months inside of the box, and I'll tell you what, things are starting to change in the marketplace. And let me show you specifically what is changing here. So we follow the financials kind of just incessantly. Like, you know, the financials, this is what brought the S&Ps higher, okay? And now the financials are starting to break down. If you take a look at the auto expected moves, the financials, they're literally on the edge of the expected move. So with that in mind, you're like, well, what does that mean? It means if it starts to actually break outside the expected move, the market's getting just totally and completely squirrely. With that in mind, go look at the IWM, okay? The Russell, oh, 2 deviation move, okay? Put on your big boy pants, because we're rocking outside the expected move. You go take a look at the Nasdaq, okay? Here's the irony of the Nasdaq. The Nasdaq actually hit literally yesterday the upper edge of the expected move. At this point, it's back to where it, well, started the week. So as I said, this marketplace is getting squirrely and squirrely in a hurry. But when we talk about correlation, now we're not going to look at the S&P 100 and be like, hey, look, the marketplace is selling off with a 50-50 advanced decline line. Forget about that. Here's the bothersome part of this. See right here? The bonds. They're rallying. The bonds are rallying. Then what else is going on? Okay? The Nasdaq is still selling off. Oh, we've completely changed. Okay? We've changed in a matter of days. And most people are not going to catch this. And you're like, wait, what is he talking about? Okay? Lately, what we've actually seen inside of the marketplace is, for the most part, the bonds have been selling off. Here's our bonds. The bonds have been selling off. And the bonds selling off is actually causing what? Rates to head higher. And as rates headed higher, okay, tech went lower. Oh, except today, we've actually got a rally in the bonds. Rally in the bonds brings what? Rates lower, but doesn't matter. Tech is still selling off. We have actually reversed everything that you know about the marketplace. To further that for a second, you take a look over here at what? The financials. Well, this makes absolutely unequivocally no sense. The rates are going where? Lower today. Just take a look at them. Go look at the TNX. TNX, what is TNX doing? It's coming down a little bit. That's the 10-year. Why is the financials rebounding a little bit? You know, I have a pretty good reason. The financials are probably rebounding because they're trying to hold on to the edge of the expected move at this point in time. By the way, there we are. The express train down to 3880 is going on right here, right now. And again, you know, you're about to see the S&P's down 20 handles with the advanced decline line at a 50-50. That should leave you, okay, very uneasy. And that's why I, positioned that question. The Nasdaq and the Russell, are they really a sign of things to come? Of course, you better believe it. If there's still sell-side activity in the Nasdaq, if the Russell continues to go like this, it is going to be over for the S&Ps. They're going to throw the towel in, break outside the expected move. We're going to get downright squirrely in here. The interesting irony of all of this is volatility isn't really playing much of a role. So all of the rotations that we've seen, and this is what you have to really gather out of this evening's video, all the rotations that we've seen lately, okay, specifically with the bonds trading down, and bonds trading down is taking rates higher, that is going to hurt technology. It's gone. Because again, rates today, bonds have rallied, and the S&Ps, they're off. But more importantly, the Nasdaq is actually getting hammered now, down 1.6%. Okay, down 1.6% with the fact that rates are effectively lower. So now we have something else to worry about inside of the Nasdaq, other than, of course, the interest rate component in there. Now, okay, the big question, of course, in days to come is this going to start to correlate? Because if it is, you're not going to see the S&Ps down 20. You got to realize there's 50 other stocks on the screen to sell. Okay, so if you're not into the advanced decline line, I think you should start looking at stuff like Caterpillar. Caterpillar's had kind of a wicked few days to the downside here. If you take a look at auto expected move, though, it actually rallied and is falling. I would watch Caterpillar in the next couple of days because this could actually be a sign of much to come inside of the broader market. Last point that I want to make in this evening's video with 2 minutes to go to the cash close. And again, our low is just right into that 3880 handle. Last thing over here, take a look at the SPX with me. The SPX, and in SPX, these are the hand-drawn expected moves. Okay, each and every week, we actually bring up expected moves, and the expected move. This is where the week started. This is the upper edge of the expected move, the lower edge of the expected move. You have to realize, and I do this every Wednesday, you have to realize the expected move this week was plus or minus, roughly speaking, $75. Where are we right now? We're nowhere. We're a hop, skip, and a jump off where we started the week. Okay? You better know, okay, in the back of your head, 3840 in the SPX is roughly the lower edge of the expected move. Okay? The upper edge of the expected move is closer to like 3990. Why do I bring these up? Because there's a extraordinarily high probability of actually tagging the upper or lower edge of the expected move. Now, to put my own bias in there, well, come on, we're already headed to the downside. Let's take a shot and look for the 3840 to actually be tagged, all right, on Thursday or Friday of this week. What does that mean for you? It means put your helmet on. We're expecting a little bit of volatility. And by the looks of the Nasdaq, by the looks of the Russell, we're getting just that. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.